Hey there, this is Jacob Wood with Douglas Elliman Real Estate, and I have for you here the Q4 2023 Manhattan Market Report from Douglas Elliman and Miller Samuel. Now, before delving into the entire Q4 report, let's look quickly at the December contract signed report showing just market activity from last month. Last month was the first full month buyers had access to mortgage products with rates low enough to support a healthy long-term market. That initial data is encouraging. We see a 2.5% increase in sales activity for condos and a nearly 7% year-over sales activity increase for co-ops, which is especially encouraging because the co-op market was hit harder by high rates than the condo market. The average co-op buyer is just more likely to need a mortgage than the average condo buyer. Now, looking at the entire Q4 report as a whole, that data is also encouraging. We see a 5.5% decrease in year-over sales activity last quarter, but that's to be expected since buyers were still dealing with the high rates until about Halloween last year. When we also put that next to the 22% year-over decrease in sales volume in Q3 and the 38% decrease in sales activity first half of last year versus the first half of 2022, we see that the effect high rates have had on the Manhattan market likely peaked last quarter. Another data point that peaked last quarter almost certainly was the market share of cash buyers, which came in at an all-time high of 67.9% in Q4. Over 2 out of every 3 buyers last quarter was all cash. Now, when we put that next to the 28% decrease in sales activity through the entire year last year versus 2022, we see that contraction was limited almost entirely to the mortgage contingent buyers. So, if you're a seller of a home whose average buyer is likely to need a mortgage, say uptown co-ops below $2 million, your buyer pool was cut in more than half over the past couple years, and you only began to see relief from that last month. Looking forward, we are likely to see more relief there as interest rates have already dropped 10 basis points off of their October highs and are slated to drop further over the next 12 months. Now, while presidential election years typically get rocky starting in late summer, I anticipate the first 6 months of the year bringing us a real rebound in sales activity versus last year. This is Jacob Wood with Douglas Elliman Real Estate.